If you pay fees for the management of your registered investment portfolio, be it an RSP, a RIF, or a TFSA, those fees are never tax deductible. That being said, how should those investment management fees for registered plans be paid? Should they be paid from funds within the registered plan itself, or should they be paid by using outside funds? Our newest report reviews some of the tax rules surrounding the payment of those fees for registered plans and tackles the question of the best place to pay the fees based on a variety of factors such as time horizon, rate of return, and tax rates. Just to give you some background, back in the fall of 2019, the government confirmed that you can pay the investment management fees for RSPs, RIFs, or TFSAs from outside the particular registered plan without attracting a penalty tax. You see, there's a set of rules in the Income Tax Act called the Advantage Rules, which basically say that if you receive an advantage from an RSP, RIF, or TFSA, there is a 100% penalty tax on the fair market value of that advantage. The rules were originally introduced in 2009 when TFSAs were first launched and began applying for RSPs and RIFs in 2011. They were later added for our ESPs and our DSPs. The point of the advantage rules was to target abusive tax arrangements that seek to artificially shift value into or out of registered plans. The good news is that the CRA has confirmed, and the Department of Finance has also confirmed, that if you pay investment management fees from outside of the plan, that will not be considered to be an advantage, and therefore no penalty tax will apply. So now the question comes down to, should you actually do it? In our report, we analyze the factors that you need to consider, including your rate of return, your time horizon, and your tax rate in the future. And you need to keep in mind that if you pay the fees from inside the plan account, the government is paying for a portion of the fees. In other words, if you pay the fees from outside the account, you're using after-tax dollars. When you're paying the fees from inside the plan account, you're using pre-tax dollars. At a certain point, there's what we call a break-even point, which means that the benefits of leaving extra money inside the registered plan can outweigh the benefits of having the government share in a portion of those fees. But that break-even point could be 20, 30, or even 40 years away, depending on your rate of return. More details are available in our latest report called Inside Out: Fees for Registered Plans.